Welcome back to Dinar Community Channel. The news of a massive Iraqi dinar rate jump sent shockwaves through financial communities across the globe, but nowhere was the excitement more palpable than inside the borders of Iraq and in the countless exchange centers scattered worldwide. Within hours of the rate change appearing on multiple bank screens, long lines began forming outside banks and authorized currency exchange facilities, stretching around blocks in major cities. This was not just another fluctuation or speculative rumor. This was a seismic event in the currency market that transformed years of speculation into a historic reality. For years, investors, dinar holders, and financial analysts have tracked every whisper of a possible revaluation, dissecting each statement from Iraqi leadership, scrutinizing international monetary policy shifts, and monitoring economic reforms. The journey had been marked by a series of highs and lows, false starts, and cautious optimism. Yet, the latest rate jump was unlike anything seen before. The magnitude of the increase was not a subtle adjustment but a leap so substantial that it triggered immediate reactions in both domestic and international markets. Inside exchange centers, the atmosphere was electric. Customers clutching neatly organized bundles of dinar bills exchanged excited conversations, many recalling when they first purchased the currency, often years or even decades ago. For some, this moment was the culmination of a patient and often frustrating wait, while for others it was a strategic financial move that they hoped would change the trajectory of their lives. Employees at these facilities worked tirelessly, processing transactions at a pace that tested both their systems and stamina. The hum of counting machines mixed with the voices of customers, the rustle of currency notes, and the constant buzz of mobile phones as news of the rate jump spread like wildfire. Banks in major metropolitan areas responded quickly, extending their operating hours to handle the influx. Some had preemptively prepared contingency plans for such an event, setting up extra service counters, increasing security presence, and ensuring that digital banking systems could accommodate the surge in activity. Despite these measures, many still found themselves overwhelmed. In several cities, crowd control became a necessity, with security personnel managing queues to prevent disorder. The scale of participation was staggering. Across the United States, Canada, Europe, the Middle East, and Asia, dinar holders flocked to exchange centers. Social media was flooded with photos and videos of people lining up, holding exchange receipts, or celebrating outside banks. In some cases, spontaneous gatherings formed, with strangers bonding over their shared experience of witnessing this financial milestone. Online forums dedicated to the dinar community lit up with real-time updates, exchange rate confirmations, and detailed reports from people on the ground. The psychological impact of the rate change was as significant as the financial one. For years, the Iraqi dinar had been seen as a currency bound by political instability, war recovery efforts, and economic challenges. Its value on the international stage had been suppressed, and while speculation about a potential revaluation persisted, skepticism often ran high. This sudden and substantial jump shattered those long-held doubts, signaling not just a shift in numbers but a potential new chapter for Iraq's economic standing. Economists quickly began analyzing the possible causes behind the surge. Many pointed to recent structural reforms in Iraq's banking sector, oil revenue stabilization, and strengthened trade agreements as contributing factors. Others speculated that international bodies, such as the IMF and World Bank, had played a behind-the-scenes role in aligning Iraq's currency policy with global standards. Still, the exact mechanisms remained a blend of confirmed developments and educated conjecture, leaving room for continued debate among experts. For ordinary citizens and small-scale investors, however, the why mattered less than the reality unfolding in front of them. The immediate priority was to secure exchanges at the newly elevated rates before any adjustments could occur. Some opted to exchange only a portion of their holdings, hoping for further increases, while others took the opportunity to cash out entirely. Financial advisors across multiple countries reported a surge in consultations as clients sought guidance on how best to handle their sudden windfall. In Iraq itself, the mood was one of cautious celebration. Government officials, while not making sweeping public statements, signaled a commitment to maintaining stability in the wake of the rate adjustment. For a nation that had endured decades of conflict, sanctions, and economic hardship, the newfound currency strength represented more than just financial gain, it was a symbolic step toward restored sovereignty and global integration. Markets in Baghdad and Basra saw increased activity as merchants and consumers adjusted to the new reality. The ripple effects extended far beyond Iraq's borders. Forex traders experienced one of the busiest days in recent memory, with liquidity in dinar-related pairs surging dramatically. International banks with currency exchange desks saw unprecedented traffic, both in person and online. The global currency exchange ecosystem, often dominated by the movements of major currencies like the US dollar, euro, and yen, found itself temporarily reoriented around the dinar's meteoric rise. Still, with opportunity came risk. Authorities and financial watchdogs issued warnings about potential scams and fraudulent schemes preying on uninformed or overly eager currency holders. Fake exchange centers, phishing websites, and deceptive offers began appearing almost immediately, prompting urgent reminders to deal only with licensed and verified institutions. The sheer size of the event made it an attractive target for bad actors hoping to exploit the rush. Many within the dinar community viewed the massive rate jump as validation for years of steadfast belief in the currency's potential. Online personalities and analysts who had long predicted such an outcome found their credibility bolstered, while those who had dismissed the possibility faced renewed scrutiny. The emotional landscape was charged. There was joy, vindication, relief, and for some, a lingering disbelief that the long-awaited moment had finally arrived. The event also sparked conversations about long-term financial planning. Experienced investors cautioned against impulsive spending, emphasizing the importance of securing assets, diversifying investments, and consulting with professionals to ensure sustainable gains. Stories began emerging of individuals paying off mortgages, funding children's education, or launching long-delayed business ventures. For many, the revaluation was not just about immediate profit but about creating lasting security and opportunity. In broader economic terms, the rate jump had potential implications for regional stability. A stronger Iraqi dinar could bolster trade within the Middle East, reduce dependency on certain imports, and encourage foreign investment. It could also shift the balance of currency influence in certain markets, prompting adjustments from neighboring economies. Analysts noted that while the full impact would take time to unfold, the initial response suggested optimism from both domestic and international business sectors. For the moment, the defining image of the day remained the sight of people, ordinary and extraordinary alike, standing in long lines outside exchange centers, united by the shared goal of seizing a once-in-a-lifetime opportunity. The energy in those lines was a mix of anticipation, anxiety, and exhilaration. Conversations ranged from trading rate updates to recounting personal histories with the dinar, creating a collective memory that many would carry for years. As the hours turned into days, the frenzy began to stabilize. Exchange centers reported gradually shorter lines as the initial rush subsided, though activity remained far above normal levels. Financial markets adjusted to the new rates, and the focus shifted to monitoring whether the dinar could sustain its elevated position. While some speculated about the possibility of further increases, others urged caution, reminding that currency markets are inherently volatile and subject to change. The historic nature of the event could not be overstated. In a financial world often driven by incremental shifts and cautious adjustments, the massive IQD rate jump stood out as a rare and dramatic transformation. It reshaped portfolios, altered economic trajectories, and rewrote the narrative around one of the most closely watched currencies in the world. Whether viewed through the lens of personal gain, national pride, or macroeconomic strategy, the day marked a turning point that few who experienced it would ever forget. In retrospect, it was a convergence of factors, economic reform, geopolitical developments, and sheer market momentum, that propelled the dinar into its new valuation. But beyond the technicalities, it was the human stories that gave the event its weight. Families who had quietly held onto currency for years saw dreams materialize. Retirees found newfound security. Entrepreneurs gained the seed capital they had long been searching for. In every case, the rate jump translated into real-world impact. The months ahead will determine how this moment is remembered, whether as the beginning of a sustained era of strength for the Iraqi dinar or as a singular peak in a volatile journey. For now, the currency community remains watchful, hopeful, and perhaps more united than ever. Across cities and continents, those who stood in those long lines will share a common story, one that begins with the words, "I was there when the IQD rate soared, and the exchange centers were packed." Like and subscribe for more videos.